Neeraj Dewan also joining us now. Neeraj, closing the year out, and there seems to be a little bit of gloom in the air, not in terms of where we're trading, but in terms of economic forecasts going forward and how the slowdown could further corroborate earnings, further deepen, in fact, the crisis to some extent. How much further do you feel we could see that economic deterioration, would you still stand by the fact that the worst is probably over?
Yeah, good morning. I'll start by saying that I definitely have a feeling that the worst is over, though, things will not recover that fast. Like we've seen, there's definitely a slowdown which is visible everywhere in all parts of the economy. And, you may start seeing some green shoots, like in autos, we're expecting that this month may not be that bad and maybe some improvement. So we'll get to know that in a couple of days, but day after when the figures come. Because of that also seen some momentum happening in auto ancillary stocks. So we are right that earnings may not be that easy to catch up. So what has happened now is that from October, September, when we saw lows in the mid-cap, the broader market, from that level, certain good quality mid-caps stocks in the broader market have really come up to a decent extent. So to continue, the figures have to improve, the earnings have to improve. So that is definitely a challenge. Like we saw this, the RBI report on the bad debts, which situation may deteriorate going ahead. But then if growth comes, then that may not look that bad, because growth will take care of that part of it. So it's definitely a challenge, but I feel that from these levels, we should see some improvement happening as far as the economic numbers are concerned. And of course, budget will be very important now. We're already entering January in a couple of days. So budget will be very important document where, we know the challenge is there, the earnings are not there, the collections are not there, but then still the economy needs some more boost. So we have to see how the budget balances that aspect also.
All right, fair enough. So then, given that valuations on the large caps continue to be at those higher levels, do you see the breadth improving? Do you see mid caps catching up? And what's the kind of timeline you're looking at?
Yeah, that is the basically bet or the outlook for the year ahead, is that large cap space, if you talk about those 15-20 stocks which have taken the index and the Nifty to these levels, for them to really give you exponential returns or outperforming returns from these levels may get difficult, because valuations somewhere do matter. So, their money has been coming in, whether domestic or foreign money, and it's been coming in those stocks only. And those stocks at a level, you can't keep on giving a higher multiple, 30 can't become 40, 50, 60. So somewhere you need to see that the valuations are already pricing in a lot of the growth of the next 10, 15, 20 years for those companies. So the broader market has to participate, the market has to broaden. Like I mentioned, auto ancillary, that is one space. We're already seeing some interest coming in that space. So other consumption stocks also, whether it's FMCG, the likes of Dabur, Godrej, these stocks, and the domestic infrastructure consumption, like something like cement, steel, they need to contribute from these levels. So this is where the challenge will be, whether the numbers, economy improves and they are able to contribute. So my bet would be that the sectors at the broader market will participate going ahead, though it will be not so easy in the initial 2, 3, 4 months to pick up the right stocks and get that kind of return. So one needs to be very stock specific and be investing in stocks where the quality is good. And because now also, over leveraged companies people are not liking. Even leverage is the word which people are not liking at all. So need to identify companies where the leverage is within comfortable limits.
You've got a lot of focus when it comes to the auto space as well. You're actually looking at a pickup there quite aggressively. Neeraj, just talk us through the rationale, the kind of opportunities you see. Is this just pure bullishness on consumption, or specifically a turnaround in auto that you're looking at?
See, as far as earlier we were looking at interest rates coming down, progressively in the monetary policy meetings, and that was helping. That would have helped the auto space of the consumption. But now I have a feeling that whatever had to happen as far as the interest rate reduction is concerned would have already happened as far as the RBI is concerned. So they should be now pushed by the banks and the financial NBFCs to really push the growth going ahead, put the credit growth, and they may now pass on some of the benefits as far as interest rate reduction is concerned. So that can really push. So I'm not that aggressive as far as the auto is concerned, but I'm positive to the extent that to start with, at least the passenger vehicle space, whether it's four-wheelers or two-wheelers, should see improvement. Well, let's see what December numbers are, and then we can take a cue from that. So if that is showing improvement, then I think my thinking would be corroborated, and I think going ahead you may see some improvement. So we have to see passenger vehicle space and specific auto ancillaries where the valuations are still very attractive as far as the autos are concerned.
Just wanted to get in a sense as to within the housing finance companies, within cement, Neeraj, which are the top stock ideas?
So as far as housing finance companies are concerned, actually we are more positive on institution-backed housing finance companies for which capital was not a problem. They were able to raise capital even in the last 1 year when there was the situation was tough for housing finance. So in the housing infrastructure space, institution-backed companies like LIC Housing, Canfin Homes, and even Hudco, which is a infrastructure and housing company, finance company. These are the kind of companies we are laying our bets on right now, because for them they have the capital and they can raise the capital, and for them the capital cost didn't go as high as some of the other companies which were more aggressive earlier. So these are the kind of companies one should be looking at. And as far as cement is concerned, I would like to stay with the large caps because they also corrected, whether it's ACC, whether it's Ultratech, whether it's Gujarat Ambuja. And these are the kind of companies where I would like to be investing in right now, and then look at something in the mid cap. But right now the large caps and the cement.
Thanks so much for joining us this morning.